Thanks for joining us for the Member xCite presentation. The Member xCite presentation is informative, interesting to the audience, and showcases the strengths of the presenter as an entrepreneur and their area of expertise. It's not a sales pitch, it's a 10-minute educational and insightful exploration into what they do. And of course, it's exciting.
So today we have the immense pleasure of hearing from Vaibhav, aka Rasti, Rastogi, from Get Rare Properties, the right portfolio approach to building wealth. Rusty is a licensed business buyer's agent, property expert, and a long-term property investor who specializes in helping home buyers and investors buy the right property at the right place for the right price. Rusty is an architect turned into a fund manager where he has managed money $2 billion plus working with top banks. He built his positively geared property portfolio in a short span of 7 years without compromising his lifestyle. His financial freedom allowed him to pursue his passion for helping others. He founded Get Rare Properties, an independent buyer's agency to achieve just that. Now, the ABS suggests that 90% of Australian investors have only one or two properties, and less than 1% have 5+ properties. Thus, many of us fall into achieving our goals, or fail, to achieve our goals, and continue to stay in this vicious cycle of a rat race. However, if it's done strategically, property investing can offer you the life you deserve.
Ladies and gentlemen, please put your hands together for Rasti Rastogi.
So what I'm trying to share here is that it's the portfolio approach which we can leverage very easily to build our, nest egg very quickly that will allow us to get the financial freedom. Before anything, just like any financial presentation, I have to have this disclaimer that one should not just act on this advice alone. One has to have the professional advice before they act upon it. So just very quickly about my journey, I started as an architect from my passion for properties, switched gears, got into IT and then into investments. And then on the sidelines, I started doing property investing, build my portfolio that got me financially free. And then I started this company called Get Rare Properties with the intent of helping other people to build their own financial freedom, wealth for the financial freedom. So like whenever we are looking for a property, people tend to look for cash flow versus capital growth. And that is kind of argument that people get into. And my take is that it has to be a combination. And also one has to look into the equity as in the bargain that one can get. As such, in summary, it should be the fine balance between the three as in cash flow, capital growth, and equity. And more importantly than that, like people tend to miss out on the risk element of property investing. Just like any investing, we have risk and return together as in goes hand in hand. Somehow in property investing, we just talk about the return components, whether it's a cash flow or capital growth. And my argument is that we really need to think of that as a combination, but also have a very close eye on the risk side of things, because risk can bring people down as well. So one has to be very conscious of the risk. So there's an ebook that I've written. The link is over there for someone who really wants to have a look. By all means, have a look at that. What I'm proposing here is that we should be always thinking in terms of the portfolio. Like, so for example, if somebody has maybe about $1.5 million to invest, I would recommend that maybe think about 2 or 3 or even 4 properties within that same budget. So effectively buying 3 properties of 500 each, or maybe 4 properties of about 380 each, that would serve them better. The whole idea is that because we are buying multiple properties, we can choose to put in different areas so we can diversify for growth. And because every area, as in geography, has its own different growth cycles, we are effectively buying in different cycles as well, because we are choosing different diversity in the location wise. Also, the good thing about the portfolio approach is that one can choose to sell the property as in one property among 3 or 4, as compared to trying to sell a 1-bedroom or 4-bedder, which is not possible. So it just gives an opportunity to deleverage as and when it's required, And more importantly, it's a very balanced approach. We are buying small properties, relatively speaking. So it's like we are diversifying, and we are putting, we are not putting all the eggs in one basket, but rather looking at different baskets altogether. And the other aspect is coming from my own background of retirement planning and financial planning. This can actually help us with the goals-based investing. And what it means is that we can buy properties and earmark them for a particular goal that we might have. For example, like going out for 6 months on a cruise, for example, I can say that, okay, this property that I'm buying is actually for that purpose. As and when it actually goes to that target, we can go and use that fund or the property for that. So the whole crux of this is around portfolio construction. And yes, we are going for a portfolio from what I've just shared, that why we should be thinking about a portfolio, but then there's a specific steps that we need to follow. It's like building a tower. We just can't really go and put one floor at a time and then think of putting another floor later on. It has to be a very thought through, a blueprint first as a map or design, so that we can lay the foundation deep enough for the tower to stand stable on top of it. So the 4 steps of portfolio constructions are basically, we have to start with end in mind, like what sort of passive income we want to generate. Having that clarity, okay, like whether is it $80,000 per year that I want to replace, or is it 100,000 or 120 or whatever it is, we start with that goal. Now, what it does is like it will help us come up with the strategy or come up with the kind of a GPS navigation system that this is where we are today, where we want to be, and then try to work it out how we can go there in a more optimal way. Of course, take into account the personal consideration and also the risk appetite. So the first step is understanding what we want to achieve. Then we define the strategy in accordance with that. And then the key thing here is that buying the right property so that it is actually fitting in the portfolio, and then it grows in value, that we can go later on and start drawing the equity. And then we repeat the whole process of reviewing our strategy, which is basically more about checking whether we are in alignment of that or not, also taking into account the banking lending regulations, and then work our way up. In other words, like the stages that I've actually named here are basically 4, as we can see: acquisition, growth, consolidation, and retirement. What it means is that if we start with the end goal in mind, so basically if we understand that what sort of passive income we want to generate, which give us the retirement or the financial freedom. And what it means is that we are not really quitting our job. It's just that it gives us the choice to retire if we want to. So we are doing only what we like rather than what we have to do. And then we try to work it backwards. So essentially, if I start with the first stage, which is acquisition, here the idea is that how quickly we can acquire the significant amount of portfolio, then letting it have the time to grow in value. And once it has reached to its equity target, that's what we have been looking for, we sell half of our portfolio or equivalent of that portfolio to pay off all the debt of the remaining properties to get fully paid off properties, which will generate the rental yield of the amount that we are looking for. So as an example, if I'm looking for, as an example, 100K passive income. So this is my end goal that I want to generate. And what I'm saying here is that in a simple example, 100K basically means $2.5 million portfolio. Let's say that we are buying 5 properties of 500 each. And the idea is that we acquire 5 properties very quickly. And then when we sit on them, let them grow, let them double whenever it doubles. I'm not really putting a number of years to that. It might take 7 years, 10 years, 12 years, whatever it takes. When the property value goes up from 2.5 to 5 million, we can sell half of the portfolio to bring it back our leverage level to 0, because when we started it, we are assuming that we have borrowed all the money from the bank, which is not practical. So the key here is that we buy, again, going back to the first step, we buy a portfolio of $2.5 million, get the loan of $2.5 million, and assuming it's interest only, 0 cash flow, all we are doing is basically sitting on it, let the portfolio value grow. Essentially, if it's interest only, the loan value stays the same. And then we sell half of our portfolio to pay off that debt, basically making these debt-free properties, which are just generating rent for us to enjoy passive income. I know I've actually packed a lot of information here, but I'm just trying to cover the whole ground here. So essentially, if I have to say, like, this is theoretically, it makes sense, but how it works in the real sense when I'm working with someone, or when you really want to work for yourself, then the key thing is to understand what our desires are, what our long-term goals are, your current circumstances, along with your risk appetite. Then that will define what your current cash equity is looking like, what your current borrowing capacity is looking like, and so on. And then have our roadmap, just like any financial planner will do, defining how many properties we need, what sort of timeline we are looking for in acquisition, what time it takes for the growth, and then what we are doing. So that really clearly gives us the clarity of how many properties we want to acquire in the beginning itself, and what sort of passive income we can generate. The good thing is that once we are done with the acquisition stage, like, we are just sitting through this growth stage and just seeing the property value grow in value by itself. So essentially, this investment strategy serves as a kind of a GPS to our investment journey, and then it gives us a lot more clarity on how we are doing against it. So I'll probably stop there and see if there are any questions out there.
Well done, Rusty. Maybe just let's stop the sharing there for a second.
Sure.
If we can unshare. But that was an exceptional presentation. And for everybody out there as well, I've just done a 30 to 40-minute podcast episode with Rusty, and he really broke down real estate, the role of the buyer's agent, the role of the real estate agent, better than anyone I've ever spoken to. So if you want to find more about this stuff, it's a fantastic episode to listen to. But has anybody got any questions for Rusty?
Rusty, do you invest in projects at all?
So projects as in the development projects, you mean?
Yes. So I've got a client on my side. He's got a project in Brisbane on the south side. He wants to subdivide housing into a community buildings.
Yes.
And he's got funds, like, he owns the property, and pretty much he's got the funds for half of it, but he needs someone for 50%. Do you do joint ventures at all?
Yeah, so I'm actually into it, but I don't really, like, I do only a handful of projects, and I do help with my investor clients who really want to get into the developments as well. Having said that, my strategy is more of a passive building of the portfolio. Mm-hmm. So I'm purely working as a property buyer's agent. I mean, I'm a qualified developer as well. Like, I've been doing some development projects as well. So I can come more as a consultant, but when it comes to getting the joint venture thing going on, I can certainly evaluate on the case-to-case basis, but not really a full-time thing that I do, actually.
Do you have any investors that might be interested if I could do a Zoom meeting maybe in a couple of days with you to go over it?
Oh, certainly, like, because when I'm meeting with lots of people, like, there are people who have a bit more risk appetite and more funds with them to play with. Certainly, there's an opportunity for me to help you connect and advise on those joint venture possibilities there. Yes.
Okay.
Awesome.
Thank you for that.
Yeah, you guys have a lot of stuff to discuss after the meeting. Any other questions for Rusty? I've got a quick one, Rusty.
Sure.
I mean, what do you find generally are the biggest stumbling blocks for people from a mindset point of view when they want to build a wealth portfolio, property portfolio like that?
Great question, Darren. And even if you have not really said mindset, I would have said mindset is the biggest issue. And specifically on mindset, the thing is that, as the statistics says, like, lots of people have actually failed on average. So 90% have only 1 or 2 properties, but then it's only 1% who has made it big. So the thing that I've actually seen is that lots of people follow the herd behavior. They really look at what people have done, the kind of conversation they get into it, like over the barbecues or over, in the social gathering. They just tend to follow a bit more than what others are doing as well. So the key thing here is the leverage, money leverage, which everyone probably is aware of, putting 20% or 20% in the deal and getting the rest of the money from the bank is one part. But the other key is the knowledge leverage, in the sense that how do they go about getting the expert who has done it successfully, has learned from the mistakes or otherwise, and how they can leverage on that. The challenge is that people think that this is kind of a hobby. All you have to do is turn up on a Saturday, open homes or auctions, and then put an offer and they get it out of it. The key thing here is to understand like what sort of, I guess, mindset goes in, psychology goes in buying it. What are the, I guess, the pain points or the levers that the selling agent can use, because they're very proficient, they're very professional. And I give credit to them because that's their job, to sell the property at the maximum price possible. However, when a newbie or someone who's doing it for the first or the second time probably has not really much clue on how to go about it. So I guess the mindset on how to make it big, especially when they don't really, the people in general don't really see that this is possible.
Mm-hmm.
They just get used to that 9-to-5 job and they have a plan or probably no plan whatsoever.
Yep.
But they don't really get used to that 1% because they're very, I guess, a minority and they don't really talk much about it.
Yeah.
So having that kind of exposure that money can do wonders when they have, or even when they don't have, leverage is a key thing. And getting that goal sooner rather than later. So it's the mindset of knowing what is possible and being aware of what you don't know.
Yeah.
Of what you know.
And these days, things are so getting more and more complicated every day that you really do need to find somebody who's done it before so you can leverage that experience.
Exactly right.
Yeah, well done.
Thank
Parul, question.
Yeah, it's just adding to what Rusty was saying. Like in the past 1 month, property prices have shot up by 10% in Sydney. And I see like people discussing that their $1 million house has gone up by 100,000 in 1 month. And the reason why most people don't get into this is maybe because they're not aware of, they're not reading enough. But once you do, you know that, you know, in the coming 3 years, all the money which has gone to the job keeper, the job seeker, and the government bonds and all that thing which is happening in the big financial thing in our country and everywhere else in the world, we're like sitting on a time bomb. So if anybody can get into it at this point of time, they should. Like, I'm just adding to Rusty, it's not professional advice, but that it's on that mindset thing. And those people who are not scared to jump in, like they've got huge returns. It's just to be seen. Yeah.
Amazing. Well done. Thanks, Parul. Yeah.
So if I can add on to it, like, yes, there are deals whereby 10% has jumped up, but then there are deals that you can go, if not on the market, at least at the current level that we can find it. Like as an example, 6 months ago, the property that we bought is already shot up by 25%. And the reason is that we bought 10% cheaper, and there has been about 10% growth in last 6 months or so. So there's a huge money as an ROI that we can get because of the leverage money. So I agree with that, Parul. But having said that, the opportunity is all over, but don't take it as a hobby. Use a professional advice. Like there are likes of Glenn's as well in the group. There are lots of people who are doing it professionally. Leverage them. I mean, I'm not saying that I'm the only one. There are a lot of people, and Glenn, I know him personally. He has done a great job as well. So leverage people like him as well.
Because I've seen a lot of people who rush into the property market in a hurry, and then they just buy anything which is available and totally unable to sell it after a few years. So if you want to get the best out of your buck, you better make a good decision. And, you know, I think it's always better to consult somebody who knows better than you, and he's a professional in what they're doing. So yeah.
So true.
Absolutely.
So true.
Because it's very easy to make a mistake in this market, which is overheated. You know, properties get sold even before they end up on the real estate or the domain, whatever.
Yep.
And people are so eager to buy that they're going to buy anything regardless of what's wrong with the property.
Yep. People
So
get
don't
emotional. Yep. Well
I'm just cautious of time, but I would like to add one more thing.
Yeah,
The real value that we add is more from the off-market listings. Like almost about 1/3 properties actually get sold without really hitting the market, as in like realestate.com.au or domain.com.au. And that's where we really find gold nuggets, because there's no competition. We know the area very well because of this is what we do on a daily basis, and get that relationship with the selling agents. And more importantly, it's not just the price point that seller is looking at. Sometimes it's the terms and conditions and the privacy, as well as the speed of the execution. That actually helps us as in to serve our clients, because for us, it's the price, for them, it's the speed.
Yep.
As a buyer's agent, we bring the qualified buyer, and for them, it's like the deal, and we can happily, handshake and get the deal done very quickly. So that's where we really find the good deals in this hot market today.